Well, I think to eliminate one, yeah, you kind of missed the boat in Spain. There's still a lot in the system, but just to give you a very simple metric, we saw a transaction recently, which was the sale of some NPLs secured by some decent real estate in Spain. In the preliminary bid round, there were 68 bidders. To me, I have to say life's too short to get engaged in something where there are 68 bidders. If I were an investor, I wouldn't be there. The same thing in Greece, you might have seen 2 if you were lucky, or maybe 3. I think then you go to the question of, okay, it's interesting, I can find something with a very small bidder community, but is it worth buying? And there, this is the real challenge with all of Southern Europe at the moment is, Greece is remains very problematic. Ari was talking about growth, but of course, Greece is the exception for everyone. Greece has a shrinking economy, political instability, whole series of issues with it. Portugal, interestingly, and I should be careful with my words here, but I will simply say that in the last 3 months, we have seen a lot more incoming phone calls from people in Portugal saying, might you be able to help me? Which I think is probably a leading indicator of something in the banking system there. Italy fascinates me, and I think Italy is the market that probably presents the really deepest opportunities in the distressed market in Europe. Actually in Europe, not just in Southern Europe. I think it's true of the whole of Europe. I think the critical thing I look at when I look at any of those markets is the juxtaposition between investment yield, return vis-a-vis risk-free rates, and replacement cost. And I think this is actually right now the new problem which we see forming itself in Southern Europe is people are forgetting about substitution because where there's been no credit availability, there's been no speculative development, there's not new supply there. And that's been allowing things to trade well above replacement cost in a lot of markets, even though the markets themselves are fundamentally weak. I think you need to be in a defensible position. So location is really coming to its fore. So I think and I agree with the observations of the Italians on the panel, Italy's interesting. Italy presents a lot of opportunity for prime assets, prime locations, prime land, actually prime development, I think I would go so far as to say. And that's, interestingly, the comments about the emergence of bank financing. That's where the bank financing is. If you go secondary, there's none. If you're in prime, there's plenty right now. So I think Italy presents good opportunities there. And for the brave, Greece, of course, presents, outsized returns, but it presents plenty of risks.
Sorry, if I may also location, but also quality of product. Because in Italy there is a very big lack of quality products compared to the other European market, and this again could be also an opportunity because there has not been oversupply like in other markets, like for example Spain. So there is a lot to do also in replacement, refurbishment, and repositioning of building because tenants now are looking for that.